Hello and welcome to a new edition of Market Masters. With a consistent history of 10 to 12% dollar CAGR over the last 10 and 20 years, India is now the fifth largest equity market in the world. And continued reforms should maintain India's, and I quote, fastest growing large economy, end of quote status. We have with us someone who has been a vocal champion of India for several years now. Mark Mobius is a force to reckon with in the emerging market investing universe. He's currently setting up the Mobius Emerging Opportunities Fund. So I'm very pleased to welcome him on this special program edition of Market Masters. Mark, great to have you back on CNBC TV 18. It's always a pleasure speaking with you. Mark, so let's just get the basic hygiene stuff out of the way. India still top of the list as far as the emerging market ranking for you goes?
Yes, it is. For many, many reasons, I've been a big bull on India. But we must take a long-term view. And if you look at the long-term, India looks terrific. It's got the right population structure. Now with China slowing down, India is going to be taking up the slack in terms of manufacturing and exports. So India is in a very good position. There's no question about it.
You're setting up a new fund, Mark, and you're in, of course, touch with lots of investors who want to put money into your fund and who know what you want to do. You want to put money into India. That's the largest weight for you. I mean, at least, where you want to go. From a foreign investor point of view, I mean, what are some of the pushbacks that you get right now? We're in election season right now. Most opinion polls suggest that Mr. Modi and the BJP will come back to power for a third term. So just wanted to sort of get your sense and feedback in terms of what you're hearing from investors.
There are questions regarding Modi having so much power and increasing power. But at the end of the day, India is the largest democracy in the world. It's got an incredible election system that goes on, as you know, for months. And I believe that the position of most investors around the world are beginning to change. They've, of course, been burned very badly in China, and they're looking for another place in which to invest. And India seems to be the logical choice. Now, of course, for global investors, they've been making good money in Japan. The U.S. market has done very well. But at the end of the day, India is now beginning to outperform the U.S. market, and it makes sense for people to look at India. Now, of course, there's a problem of size. There needs to be more equity offerings in India, more IPOs, and hopefully more government enterprises being listed in the market because, as you know, India has some very large government enterprises that could be listed. So that's a challenge. But of course, that will come, I believe, as Modi gets more strength politically. And of course, he is interested in digitizing the Indian economy and is interested in technology generally. So we're in a very good position now with him getting stronger with a stronger political base.
Mark, I want to come to, I'll get to asking you about what should we expect from the third term? What would you like to see from the government in the third term? Because so much of the infrastructure development and spending on infrastructure sectors, Make in India, import substitution, has been driven by government policy, right? It's not just services, it's now manufacturing, which is being built, and that's great to see. But before I do that, let me ask you this India-China question. I remember speaking with Rajiv Jain of GQG Partners. They're the single largest foreign investor in India now. He said, the shift from, people who invested in China and that money, in a big way coming to India, it will happen, but it has not happened yet. It will happen in the future. Do you agree with that, Mark, that big shift is yet to happen?
Yes, and the reason why it hasn't happened as big as it should happen is because the liquidity is not there. In other words, if you look at the size, the market capitalization of the Indian market compared to the Chinese market, it's completely different. China is much, much larger. So large investors from the US and other parts of the world find it difficult to put their money, too much money into India. So that's the reason why say there needs to be an expansion of the Indian equity market. That means more private companies being IPO'd, but also government privatization. And you mentioned infrastructure. I think one area where you can have a lot more size is in the infrastructure area if you do IPOs of various infrastructure projects, whether it be bridges, toll roads, whatever. Of course, the railroads in India is one area that has incredible potential for growth.
Mark, hi, welcome to the show. Well, just focusing a little bit on the near-term theme of elections combined with sectors or themes that you would probably like. Anything specific? You mentioned infrastructure, but would consumption, financials be themes that you would look at as a run-up to elections and maybe even post-elections?
Well, post-election, I think the very interesting area would be hardware, technology hardware. As you know, India is a huge exporter of software. They're doing very, very good in software. But now there's a need to expand the hardware sector, technology hardware. And of course, as people want to diversify their supply chain away from China, India can take up that slack. You've got the population, you've got the capability, and I believe that's going to be a very interesting area for expansion. And IPOs, by the way.
Right. So, you did speak about a lot of supply or the possibility of a lot of supply in the Indian markets, etc. as well, Mark. I want your thoughts on three things in particular. We usually ask you to make predictions about markets, but if you could give us a sense of what your expectations from the elections are and what post the elections, Modi 3.0, what does that look like to you? And for the PSUs itself, you hoped that there would be some more offerings coming in. What would your thoughts be out here?
Well, one of the things that we're seeing, of course, is Modi becoming stronger politically. In other words, it looks like he's going to have a larger, a stronger position in the political structure of the Indian market. And that is very good news for investors because it means that he's going to continue to push for technology in India and the application of technology. That's number one. Number two, he's going to be pushing more for infrastructure. And that's going to be, of course, we've seen a lot of infrastructure spending, but I think that's going to be becoming much more important and critical for the growth of India. So all of the points are in line. We're in a very good position with Modi getting stronger politically.
You mentioned more supply, right, on the equity side. And that is perhaps one thing which perhaps we've not seen over the last 10 years. I'm talking about disinvestments. Do you think that will also be picked up, in the third term? It could pick up?
Yes. A lot, by the way, a lot depends on the ability of Modi to reduce the amount of bureaucracy for people who want to invest in India. As you know, there's quite a lot of bureaucracy for people wanting to put money into the Indian market. For the large investors, it's easier, but for the smaller investors, not so easy. So I think that's something that Modi will want to work on, reducing the bureaucracy and the paperwork necessary to get into the Indian market.
Are you buying public sector banks or public sector units in general? Because the PSU enterprise crossed that 50 lakh crore in market cap. We've seen a big, relentless rally out there. Where are you on that? Are you buying at current levels? Did you buy earlier? Your thoughts going forward?
Normally, we don't go into the banks, and that's a policy globally, with very few exceptions. We find that banks are subject to a lot of government regulation, and of course, they have problems down the line if you have...
Not just banks, the public sector enterprise in general, all the public sector units.
Yes, we're looking at the public sector very, very closely. We haven't invested yet, but we're looking at it very closely because we believe that's where you can get size.
What themes there?
To invest. Yes.
What kind of themes there in the public sector space?
There, I'm very, very interested in infrastructure. I believe that that would be a very high growth area. the rail sector is very, very interesting, and the airline sector is also interesting.
Okay. Well, Mark, we need to take a short break, but before we do that, just wanted your thoughts on the entire theme of the mid caps as well as the small caps. We all know it's been phenomenal. It's been remarkable in terms of the returns that we've seen for the mid caps as well as the small caps. But do you think that there should be maybe some amount of caution which could be probably seeping in? Do you expect those kind of returns to probably continue into this year, or you're probably going to take some profits now?
That's an interesting question. If you look at the U.S. market, you'll see that the 10 big tech sector companies are most popular. And that's not the case in India yet. That could happen. But I believe that the small and mid-cap companies are the ones to look at because they're oftenly ignored and they're not fully researched. So people who are willing to put the work in and look at these companies can really make good money. And I think that's going to continue.
Well, in the recent past, you spoke about Wari, Tips, and NetWeb. Wanted your thoughts on if there have been more additions to that list.
That's a good question, but I'm not. We're now looking at them, and I can't comment.
You're going to that fund will be set up, and then you'll sort of come in. But those three still remain on the radar, Mark?
Yes, definitely, yes.
Okay, and of course, many more names, right? I mean, in addition to that, to those three names. By the way, Mark, by when are we going to see that fund?
When are we going to see what? The what?
The fund, the new fund, which you're setting up?
That will not come into play until September, October.
Okay,
We're now going
all right.
to the paper.
Okay, now just to press on that point about valuations a bit longer, right? We were talking about supply. We've had many instances of global companies, MNCs, reducing their stakes in the India entity, in their respective India entity, and essentially using that money and taking that money back home for a variety of purposes. You know, we had, for example, just to use an anecdote, the Whirlpool global CEO on the record essentially saying that there is a big valuation arbitrage between what the India entity trades at and what the global parent trades at. So it kind of makes sense to use that and monetize that arbitrage. Just your thoughts, Mark. I mean, these are business owners and sort of talking about this valuation difference. And of course, I mean, the implication being that valuations here are, quite high, relatively speaking. Mark.
Of course, you can look at that. All the multinationals almost that are in India, the valuations are higher than what you see in their home market. And there's a good reason for that, growth. A lot of people ask me, gee, India looks expensive on a PE basis, but they forget that the earnings are growing at a much faster pace than what you see in the US or China or anywhere else. So it's justified that these companies have a higher valuation.
You know, we've spoken a lot about India and the equities out here. What's interesting is the sort of run-up that we've seen in the commodities space. A lot of these hard commodities having seen big multi-year rallies. Any preferred equity plays via this space? Do you like the metal space in India, gold, silver? How do you play that?
That's a very, very good point. I believe that every portfolio should have some physical gold. Very, very important. And you can see what's happened to gold and silver. Silver is going to be, already is outperforming gold. And I think there are a number of reasons for that. Probably the primary one is that globally, there's a new generation of investors who really don't trust the central banks around the world and don't trust the currency. And they want to hedge their portfolios by buying gold and silver. So that's going to be a very interesting development. And of course, as gold moves up, other metals move up as well because they're betting on commodities in general to preserve their wealth. So we're seeing a big, big shift. And of course, if you look at the cryptocurrencies, you'll see they're moving up at a fast pace as well, in line with gold and silver.
Okay. Mark, just on that point on commodities, I know you're an India bull, but we also have Brent crude, which is at $90 per barrel. We have tensions simmering between Israel as well as Iran, which could possibly potentially be a risk for crude prices. Do you think that could be a deterrent, at least in the near to medium term?
I don't think it'll be deterrent. I think there'd be a gradual increase in the price of oil and in dollar terms. And of course, that's reflecting not so much the oil price, but the depreciation of the dollar. The dollar is, of course, very, very plentiful. As you know, the Fed has been printing and printing. Now they're reducing, but still it's an awful lot of dollars out there. And that's a reflection of the weakness of the dollar, this oil price, and commodities in general, by the way.
Just a follow-up on the crude bit. Do you look at oil marketing companies as investable options?
Yes, we do, but we're more interested in oil companies that are exploring and are having the technology to discover new oil. So that's one area which we think is quite interesting.
Any other commodities, industrial metals which stand out? I mean, copper, for example, is being. We were supposed to have a big copper super cycle in 2021. We had a sharp move, but then that fizzled. Do you think, copper perhaps makes a big comeback? Just your view on other industrial metals.
Well, I think nickel is worth looking at. Nickel would be one area, mainly because of the battery.
Okay.
Electric car battery consumption is increasing. The need for batteries. So nickel might be interesting, but you've got to be very careful with these commodities because at the end of the day, the supply-demand equation could be really a problem. But we have to look at that.
Mark, you briefly mentioned about interest rates in the West, right? Do you think, so US rates have gone to 5%, 5.25%. Markets in the West have done very well. So one can say, well, if rates going up did not hurt, if rates coming down, will they help? But on the other side, for emerging markets, if rates come down and the dollar weakens substantially, I mean, that is a time-tested kind of correlation, right? It means more flows into emerging markets. Sitting here in India, is that the bet to make? Whenever rate starts to come off and the dollar goes south, I mean, that basically pushes a lot of money towards EMs?
Yeah, generally speaking, that's the case. If you see rates come down, it'll be more attractive to go into emerging markets. But the shift to emerging markets have already begun. You must remember that if you look at the US market and the Indian market is a good example, but other markets, Korea has done well, Taiwan has done very well. So people are beginning to diversify away from the US market, knowing that the US market has performed very well, but may not continue this trend. So I believe that you're going to see a lot of people diversifying into emerging markets, regardless of what the interest rate is. Now, of course, a lower interest rate means that people are going to be putting more money into equities.
Okay. Mark, we're starting earnings season soon with TCS. What is your sense in terms of the IT space, considering the global demand situation? Any IT stocks specifically that you like, considering there is a lot happening with regards to artificial intelligence as well?
Yeah, a very good question, because artificial intelligence is really changing the scenario for software in general. And those companies in the software space that are not taking advantage of AI will be in trouble. But I believe that they have grasped the opportunity, and there'll be actually more opportunities for the Indian software companies to export their software. So I'm quite bullish on software in general, and I believe that companies that are in this space will do quite well.
You mentioned in passing about the world moving to electric vehicles. I wanted to know whether you've bought an EV yourself or not.
No, I don't drive.
Maybe he flies in the private jet. But
it's interesting that here in Dubai, if you select an electric vehicle to hire, it's more expensive than the regular petrol engines. So
understandable, given its proximity to oil. But speaking about that theme itself, a lot of people call Tata Motors as the Tesla of India. With money coming out of the US going into India, do you where are you on that?
Well, I believe that, of course, the industry in India will grow at a fast pace with more and more people able to afford AI and companies that are in the space of applying AI to automobiles, and that's going to be a very good development. But electric vehicles are the future for India as well.
And speaking about the Tatas itself, I mean, a lot of these conglomerates have come back as well. We've seen, big announcements come by from the Birlas trying to set their house in order for a lot of their companies. The Tatas, of course, have been big wealth creators. Your thoughts on some of these conglomerates? Is there anyone that you like?
Well, Tata is probably the prime example of a company that's done so well in so many areas and really improved the quality of various sectors. If you look at what they've done in the airline sector and in so many other areas, and they're really a leader in many of these sectors. So I would say that at the end of the day, Tata will do very well simply because the demand in India is going to increase tremendously, and there's going to be a demand for electric vehicles.
Right. Mark, pre-COVID, for the 10 years or so before that, it was all about services, right? It was about technology. It was about not tangibles, not hard infrastructure. That's changed over the last couple of years after COVID. I mean, I think the world's woken up to the fact that manufacturing capacities in many areas actually is not enough. So there is a revival towards that. I just wanted to understand from you the big picture over the next couple of years. What are the big themes within manufacturing? Is it electrification? What within electrification? Is it cars as a theme to play? Is it power? Is just your overall sense on what are the big manufacturing themes which will do very well? Because at the end of the day, I mean, it's all in a way global. What happens globally comes here sooner than later.
Well, the key to the entire system now is technology. When we go to a manufacturing company, in fact, any company that we're looking at, and we talk to the management, the first thing we ask is, what are you doing in technology? How are you using technology to improve your profitability, improve your efficiency? And that is the key theme. And in manufacturing, it's going to be even more important because with robotics, with AI, the efficiency is going to be improving dramatically. And that's something that we have to look at and be aware of. You cannot be investing in a company that's not using technology to improve its profitability and its efficiency. So the prices, by the way, as a result of AI, will be coming down in real terms. And therefore, the competition will become much more fierce.
Okay. Mark, before we wrap up this conversation, you've previously given a target that the Sensex is probably going to hit that 1 lakh mark probably in the next 5 years. Leave us with any kind of targets for the Nifty and the Sensex, maybe near term, maybe long term, maybe 3 years, 5 years.
Well, I stick with that target. I think that's going to happen maybe even sooner than I expected. No question.
All right, 1 lakh over the next couple of years on the Sensex. Well, Mark, it's a pleasure having you with us here. Thank you very much for joining us, and good luck with your fund. And we hope to speak with you, around through the next couple of months, and of course post-elections as well. Thank you indeed for joining us here.
Thank you very much. Thank you.